In the currency quadrant today, euro strength continues, up 5 of the last 6 sessions now. It's actually only been up 2 of the last 4 weeks, but we are back above 113 on a closing basis on the euro future and the euro versus the US dollar as well. And that is the highest level that we've closed at since the mid-April, really about April 17th. So the strength in the euro is real, at least based off of the progress we've made this week. And that really comes off of a divergence from the other central banks by the ECB. Draghi's credibility has actually been called into question by some analysts, some FX watchers, as he was hawkish in this press conference and in his statement, which is really the whole ECB statement, but it's kind of credited to the ECB head, Mario Draghi. And he was hawkish versus other central banks. We've had a rate cut from the Indian Central Bank. We've had a rate cut from the Royal Bank of Australia. We haven't talked about rate cut for the U.S. Fed, nothing baked in the cake at this point for the near-term meetings, but certainly before 2019, we've got a rate cut in the U.S. priced in. But Mario Draghi said he really wanted to keep rates the same, which added to strength in the euro for the next 12 months. That's an extension past the prior meeting where he said 6 months. He took up his forecast for growth and inflation for 2019, but brought them down for 2020. And that, again, was really breaking away from what the other central banks have been saying in light of trade tariffs, in light of slowing economies globally, especially a slowing economy that we've seen in the data lately in Germany. So that has really gotten that strength to get the euro to be back above that 113 level that I mentioned. And then we've got the dollar really collapsing. This is the worst week for the dollar since mid-January of this year, as well as it being down 3 weeks in a row. And today was really a bad day for the dollar itself when you looked at the strong non-farm payrolls number from a wage perspective that we had today. A weak headline number, very weak headline number, missed the headline estimates by about 100,000 jobs, had wage growth in there, had labor force participation rate the same, but the wage growth missed as well. It was less than was expected. The reason I'm calling it a strong number is because it was strong for the equity markets and really gave the Fed some clearance, some permission, so to speak, to actually bake that rate cut in for 2019, which again, added to dollar weakness. Dollar index has its sort of biggest weighting against the euro, so this added to the strength that we saw in the euro today.